Hi guys, thanks for tuning into another episode of Nuggets News. Well, what a crazy week it's been. Hectic in the crypto markets. We've got so much going on in those global macro markets we're going to dig into. And for us at home, we had a crazy week with our little one getting really unwell. I actually had to go to hospital on Wednesday, so that threw things out a little bit. As you'll notice, I only got to do a couple of videos this week. Bull markets are crazy enough as it is without that happening. So, hey, thankfully, back to normal this week. We welcomed 7,000 new subscribers this week. Now, that's a record for the channel, as I said, during a time when we didn't really upload a lot of content either. So I think that tells you what stage of the bull market we are in. Now, this happened near the top of the last bull market, and I'm not saying we're necessarily near the major top, but again, I just want to reinforce those messages I discussed in this update. Prices have continued to go higher for Bitcoin and some other assets. We'll dive into all the altcoin price action later on as well, though, but I would continually tell you just to exercise caution and don't fall into that FOMO and euphoria trap, because there is going to come a time where prices go down. So let's get into it. A little bit of housekeeping here. Yeah, and that knowledge center is absolutely packed out. This has got that predictive text now. It's all free for your friends and family over on Collective Shift. In the platform itself, guys, when you sign up, you get all these resources. A lot of people are wanting to know how to take profit. They want to learn how to trade, particularly, when things turn, if markets go sideways. How can you continue to put your money to work, or at least protect the wealth that you've made by reading the charts, even if you're not going to trade a lot? So I would encourage you to learn just those basics. Again, in Australia, this is a massive scam that's been going around. Coin, spelt with a Q. It's massive in Queensland. They're even sponsoring some major sporting teams. They've had a notice of disciplinary resolution from Blockchain Australia, thankfully. So they've been kicked out as a member. I think all the little anecdotes and all that I was talking about warning have come to the surface now. So starting to get ousted for the scam that it is there. So if you've got friends, try and help them get their money out before it all collapses. All right, so in Australia, I guess the big news was Facebook is taking down all these different sites. Now, we're personally affected. We love sharing, news and updates with you guys on our free Facebook pages. But this has been devastating for a lot more businesses than us. So I just feel for those Aussie businesses that literally rely on that, every week, Monday to Friday, and now they've got to try and find somewhere else to get customers from. And it just doesn't happen like that. There's not really a second player, particularly where the users are at this stage. So just have a look at what they blocked. So all media globally, we couldn't even share a lot of these crypto articles. You got to, get around it by sharing photos of the article or whatever. But, health updates, emergency services, weather bureau, this is unreal how they can just come in and just block all this kind of stuff. So apparently, back to the drawing board, Zuckerberg's holding talks with Scott Morrison, so I hope they do fix it up there, because at the moment it's a woeful thing to happen when we're trying to get employment, get back, the economy going again. Unemployment and underemployment have been falling, which is great. Martin and I will dig into those numbers a little bit more soon. But the RBA sees this significant monetary support needed for some time. So even though things are heading in the right direction, this is a case of got to do what everyone else is doing, as we've been talking about. So the RBA, they're basically saying it's this gravitational pull from all the other central banks that's led to a higher Aussie dollar. Like we've been saying, they're going to have to take rates to zero or negative and print money just because everyone else is doing it, and that's what's playing out. Now, we've seen a lot of this mistrust in executives and corporates and banks in Australia. So NBN co-execs and employees getting millions in bonuses in the back half of 2020 during that pandemic is one that's been in the news lately. In terms of property prices, we're celebrating these booms. So the prices are already at record highs, and that means record unaffordability for the average person on an average wage. Set to boom 16%. This figure of 30% in the next few years has been thrown around. A lot of places have got these big rent hikes now. It gets filtered through when we have these temporary relief measures removed for the banks and the brokers and the property owners. It all comes through that chain. And a lot of people that were getting the job seeker, job keeper, if they haven't got a job, then they're going to have to leave. We're going to see, I think, a lot of movement in the property space there. Banned super from buying houses. Look, I do think that there's just too many, I think, like advantages or ways that the people with a lot already have over the people that don't have those things. So if it was a more of a level playing field, I don't really mind, but there's just so many ways that I feel that we're adding extra capital into the property market when there's no extra way for the average guy with an average job to sort of to get in there. And at the moment, it's things like, oh, let them take out their super, their retirement fund. Um, I just think that it's way too obsessed, and the fact that we haven't invested elsewhere is just starting to become apparent now, and that is going to eventually hit everything else. So we just had that Royal Commission, and the banks promised to change, but again this week we've got news out. ANZ are part of this criminal cartel charges with Deutsche Bank and Citigroup, all these different crimes and whatever. But once again, you're starting to hear about how crypto is the problem we need to regulate. Crown Resorts, they've been in the news a lot, not suitable for holding their license. Apparently, these high roller rooms are basically money laundering facilities. I mean, I don't know to what extent, but I think it definitely has been happening. QBE posts a record nearly 2 billion lost, catastrophic year. They've scrapped their dividends. So this is an insurance company, and when we've had all those events, they've got to pay out a lot, and that has really hurt them. But these natural events are continuing to happen. We'll get to one in the US soon. Over in China, that shadow banking system of theirs continues to really expand, and you've got everything from these little apps like Weibo, delivery apps even, telling you that you can lend and borrow money. So in Australia, we've kind of had this boom of Afterpay, ZipPay, and a few of these others, but we've already got record credit card debt and household debt. But this is coming to, I guess, all countries and cultures where these digital apps and these little neobanks, or everyone wants to get into finance because it's so cheap for them to access money at the moment. So everyone wants to become a micro bank, and they want to lend. It's the easiest way to make money. So Bill Gates, he seems to be everywhere these days for all the wrong reasons, but he's warning about this, manufacturing, the changes in the supply chain could really challenge these climate goals. So seems to be all about climate change these days. Look, let's worry about one thing at a time. But the coronavirus in the US has really subsided, and a lot of people would not have expected this, seeing as we haven't really had a mass rollout of these vaccine campaigns. So are we going to hear some more data and evidence around why this is? Are we still going to have this max rollout of these vaccines where we still don't know everything about them, and there's a lot of different strains out there, when the number of hospitalisations and deaths, that's the thing that we really need to worry about at the end of the day. If that's falling off a cliff, what's the explanation for that if these people aren't getting any of these vaccines? And I hope we do have that discussion as well. As I just mentioned, apparently there's heaps of these variants around the US, and they're saying that they're more deadly, but let's wait if we see that in the data or not. The pandemic's been hitting Germany harder than the financial crisis. They've got a massive manufacturing economy. They've been hit hard. But Janet Yellen, she's praising the ECB and their decisive policy actions on her call with Christine Lagarde, who's now head of the IMF. So it's all about going hard, going early, going big, spend as much money as you can. Fauci is talking about returning to normal by Christmas, in line with Joe Biden in that big budget that they've passed. So that'll be almost 2 years. So we are starting to get long in the tooth here. A lot of young people, record high youth unemployment. They're really feeling the struggle and despair. We've heard a lot about mental health. And it's so hard. I know if you're in lockdown or you've lost your job or whatever, you just cannot blame people for feeling this sort of despair. It's been a really tough time for young people lately. So Biden's been talking about the idea here of just cancelling all this student debt with the Department of Justice and the White House. See if that comes through. Young people are burdened with more debt than ever before, particularly in the US. Mortgage demand has dropped as interest rates reach this 3-month high. So in America, it's a bit different to Australia, where they are, a lot more variable. And so when rates rise, like just before the GFC, you sort of get this immediate effect where people get hurt. Now, Janet Yellen's she's talking about this big shift. So she wants to put that massive pile of cash that the government, US government, have at the Treasury to work. So it poses a bit of a problem for Powell. He's going to have to, the Fed are going to have to step in more than they have ever before at some point here. We've got share of US workers holding multiple jobs is rising. We've seen that a lot in like retail. Manufacturing output has been pretty strong. So far, that stimulus seems to work. Walmart CEOs is just saying that Americans are really stuck. They urgently need that next paycheck. We've got online shipping costs going up, so we're starting to see that costs of commodities that we'll get to in a second come through the whole supply chain. 1 in 10 Americans may have to switch jobs post-pandemic, so there's a big turnover as well as people working multiple jobs. The world is already starting to pay more for a lot of food that we've spoken about as well, with people, even like China, stockpiling, particularly meat. Again, anything that has an input cost, it's all going to go up. Now, this is kind of funny. This is the Fed's Kashkari a little while ago here. This is only a month ago in January, saying there's not much risk of inflation shooting above 2%. And Julian here's kind of saying, I beg to differ, time will tell. And sure enough, this week, I'm not sure if he's got it here at the top of his Twitter, but we've started to get those rates, go well above 2%. Here it is here. So once again, when a central banker says something, you do the opposite. And normally, it's taken a month to prove that he's dead wrong. So some Fed staffers are suggesting that there's more to worry about in terms of financial risk than Powell. Now, Powell always is going to come out and say everything's great and talk about confidence and stability. But at the moment, the Fed are really they're distorting this idea of these inflation-protected treasuries and securities. So they've been really aggressively buying, and this is sort of masking the inflation and interest rates, particularly short-term. This is billions and billions of dollars that they're doing interfering in these markets. And we're starting to hear about problems in the repo market again because of this. Remember that all happened in September in 2019 that sort of kicked off all these financial woes. And this is at a time when, you've got investors that are going all in. We spoke about that massive, cash levels that a lot of investors had. So even when markets at record highs, we were saying that there's still a lot of cash on the sidelines waiting to buy just about every dip. Now, at JP Morgan, they're saying that the market is the most complacent in 2 decades, and I think that's because this type of investor that's in there. So once again, we get this data every week. Record insider transaction, we're up to the 70 mark here. It's insane the amount of insiders that are selling. We've got foreigners that are absolutely pumping money into the US stock market. We've got all these retail investors and Robinhood traders. And during this squeeze, this is interesting, the SEC data is showing that we actually had 360 million of GameStop shares that failed to be delivered. So the question is going to become, well, how did these be, if it is the funds that were trapped, did the brokers allow them to close their positions without actually buying? And again, that is illegal if that happens. So let's see what happens there. Bank of America clients with 600 billion, they're taking more risks than ever. Frothiness in these charts, we can see when they get the stimulus checks. We saw the data in the crypto exchanges, very, very clear that everyone went out and bought $1,200 worth of Bitcoin when they got those stimulus checks. So people are pumping those into the stock market or into the crypto markets. Penny stock craze is at boiling point. The SEC is keeping an eye on social media. This was a great article of insiders and brokers saying about how dangerously close we were to the whole system collapsing. A lot of people don't understand how the whole, brokers and clearing houses work, all the way through the Robinhood and then to the end customer. And then you've got the other, the guys that front run that data, the big hedge funds that buy for that data to see what he's doing, see what's coming through so they can high frequency trade against that. So Janet Yellen's talking about investors and, they should be wary of some sectors, and Bitcoin highly speculative, always talking about how risky that is. But once again, if you look at this data, Bitcoin's risk adjusted returns are some of the best ever. So everyone that says it's too volatile, it's too risky, well, the data shows that it's not. It's actually been the best performer, and even when you take into account relative for that risk. These are the crazy put to call options. Everyone is out there buying calls, betting the market's going to go up. Are we at a record low since 2000? So no one is buying any protection for the downside. This market mania, it's a feast. So we've seen a lot of these Wall Street guys come out and say, well, it's actually a good thing. You can make plenty of money in a mania, but it's all about keeping that money and knowing when to get out. Record. So this is 6 week cumulative flows into the tech sector. This is a record here. What are we at? Nearly $20 billion over the past 6 weeks has flown into tech. This is the number of those SPAC ICOs. So 248 in 2020, and we're only in Feb, and we're already at 154. So we're going to blow past that in the first probably 3 months, 4 months, which shows you how crazy the amount of blank checks are that are being written for people to raise money. Facebook, they're in the spotlight in Australia, but also we've got now reports about them using these like fake metrics and telling the people that are paying for marketing, this is how many impressions you got and how much reach you're going to get, and sort of fudging those numbers. Again, illegal if that proves to be the case. YouTube, terminating 3,000 channels in Russia and China with this big clampdown. Look at the censorship, whether it's Twitter, any of these others. I'm so glad that, for us personally, we put 12 months into building our own platform so that we can start to make that transition and get off all these platforms and the reliance on them, because that time is coming. These are the prices paid for the components. As we spoke about before, inflation is starting to come through, and you're going to see that in all goods. So it starts at the commodities level. We know that the commodities relative to financial markets or assets or the S&P 500, that ratio is at all-time lows. Tangible versus intangible assets. Just such a huge risk of inflation with central banks pumping economies full of money. Real yields are starting to rise. This is the canary in the coal mine for all these different risk assets. It's no surprise that Bitcoin and some of these assets are going nuts when the Fed is flooding money everywhere. Oil settles near 13-month high. We've had that big freeze in Texas, so that's hurt a lot. I think it's 1 million barrels a day. 4 million barrels a day of supply has been curtailed. There you go. So another big stimulus announced just for Texas to help them with this big freeze. But while that is offline, then oil prices are going up, supply and demand there. So here we've got global negative yielding debt. It did pass that old record as we'd predicted this year, but only by around $1 trillion, and it started to turn down because we've got, that balance of, well, are we going negative in terms of interest rates to stimulate the economy versus are we starting to get markets price in the risk that they've printed too much and we're going to see inflation, and that's why that's turning down. Metals are soaring. We've got all this talk about huge stimulus on green frenzy. So that's all going to require those input parts, commodities, rare earth metals. Now gold has really been out of favor. So I'm almost to the point where I'm wondering, is it the sentiment so bad where it's about to absolutely blow everyone away, because it just, in a time when it should have probably been doing well, it's not really doing that great. We've seen a massive plunge in that commitment of traders report. Remember we spoke about how there was way too many people and everyone was long? It's the same in the crypto markets. When everyone's leveraged long, it's very hard for it to go up, and you need a washout. So that's happened in the gold market, which is great. Global debt has now reached 280 or $90 trillion. This is 355% of GDP. This is money that's never going to get paid down. It has to be printed and inflated away. I want to finish on this one before we get into the crypto news, but I think even mainstream are now picking up about bye-bye brokers and hello blockchain. With everything that happened with GameStop, all the insiders that are selling, the high-frequency trading, no matter what angle you look at it from, Janet Yellen getting paid from all these banks to speak. There's just so much corruption. It's not fair at all for the little guy, and more people are going to start coming over and using these systems that cut out all the middleman and that insider, I guess, aspect. And hey, I'm really looking forward to that day, to that happening. But let's get into that crypto news. Okay. So once again, don't forget the Knowledge Center, all that free info over on Collective Shift, all the premium resources, guys. If you do want to sign up, we've got a record number of people that are taking advantage of our spotlight reports to go through what we think are the top 100 or so assets out of those 5 or 10,000 coins that are out there. We've got the daily snapshots, all the headline analysis and other research, so you can stay on top of the market. All right, so Australia's blockchain ecosystem needs more support from the regulators, says the industry body. I think there's still a little bit of clarity needed in some of the utility token regulation, but considering how some of the little projects have become absolute world leaders in DeFi, we're punching above our weight. I do think we could be doing so much more. And a lot of these government and regulators wouldn't even know that some of these Aussie-based projects are the top projects in the world. India plans to double tax crypto exchanges and traders before they make crypto illegal. So, man, oh man, isn't that a double blow? Institutional adoption underscores the urgency for clear crypto rules, says Hester Pierce. Just like in Australia and the US are kind of dragging their feet. Crazy they haven't got an ETF yet. London talking about slashing this red tape, just embrace Bitcoin as the city moves to this EU post Brexit. So I've spoken about this a lot, that when you've got nothing to lose and there's all this money in the crypto space and Bitcoiners are rich, why wouldn't you want people traveling there? A lot of the people that are using their crypto with that website we've spoken about in the past, Traveler, people are happy to spend their crypto and travel the world and whatnot. So people and countries are going to say, come here, spend your money, particularly when we're in a downturn. World's oldest central bank extends digital currency test until 2022, so falling behind when you consider the speed of adoption and growth of stablecoins. Coinbase is getting ready for this public listing, 77 billion valuation from this Nasdaq private market. We later saw $100 billion valuation elsewhere, so this is going to be absolutely massive. Again, during the bull market, it's just all coming together at the right time. Verge has actually lost 200 days of transactions, so this is a 51% attack. These smaller blockchains, we continue to see it every so often, and this makes people hesitant to accept them for payments, and more people are going to turn to those trusted blockchains. Cryptopia Exchange is currently in liquidation, and it got hacked again. I'm not sure if the hackers were just sitting there waiting for things to come back online, but boy, oh boy, that's not good news. And we've got OKCoin. So they've actually decided to delist BCH and BSV. Now, we've had 51% attacks for these that we've just spoke about in the past. But I think they've also said here it's kind of the community and some of the associated social media and personalities behind the projects. I think they worded as reasons why they're removing those coins. Now, I don't think Bitcoin Cash is as bad as BSV, but anyway, Bitcoin Cash has got some interesting projects coming out on it, again, breaking into the DeFi space. So this is D-Token. Their first one is Any Hedge. So they're doing, derivatives on Bitcoin Cash, and Vitalik has even spoken about using this as a data layer for Ethereum. So, get out there and have a play around. A lot of people were saying, Nugget, you're all Ethereum, but not at all. There's plenty of good projects on other chains, and this week, Binance Chain exploded. So I own BNB. I've spoken about it multiple times on the channel, but Binance Coin went parabolic this week as people started to reprice it as an Ethereum competitor. I guess people were saying now Binance Smart Chain is just a fork of Ethereum, where they've changed a few of the rules so that there's 21 Binance nodes and they control the network, so it's a lot faster and cheaper. They can set those rules. Now, it's had an explosion of the value locked in that chain, but I would also argue I think there's a lot of fake transactions from a few of the things that we saw out there, but I don't think the community loved the way that they went about it here. So Binance have suspended the withdrawals of ETH and all ETH tokens, and saying that gas is too high. But to do this at a time when they're trying to push Binance Smart Chain, a few people saying is this all just a bit of a gimmick? And then they set the default setting for all withdrawals to Binance Smart Chain. So a lot of people, like we're talking hundreds or thousands of deposits to all other crypto exchanges, they were withdrawing things like Tether, Bitcoin, USDC, and it's being withdrawn to Binance Smart Chain addresses, but users weren't aware. They're just typing in their Bitcoin address. So next thing you know, all these other exchanges like FTX have just got flooded with hundreds or thousands of support tickets saying, I sent it to the wrong address. And now they've got a heap of work to do, created from Binance. Again, I guess it gets people talking. Maybe it's a marketing ploy, but probably not done in good taste, and it leaves a bad taste in people's mouths, I think. So let's see if Binance Chain is
faking those transactions. We saw a lot of spam transactions, or if it does start to get some real natural growth and capture market share off Ethereum that has high gas fees. So Cosmos is getting ready for this Stargate upgrade. It's gone to all-time highs. Ravencoin pumped nearly 1,000%. Again, this is one that's been very popular. That's gone down that tokenizing and securities. This is that trading that we just spoke about in the macro section coming through. Cacao to record private securities on its own blockchain as NFTs. So people don't realize that NFTs aren't just art. It's going to open up the possibility to do all this other stuff. Maybe we're better having tokens as NFTs than ERC20s for a lot of applications. This is what we're experimenting with at present. We've had some massive names come out. Gary Vee, I'm a big Gary Vee fan. I'd love to talk to him about NFTs, but he's talking about all this. He loves the idea of trading and swapping assets, hustling. Digital artists continue to just sell record amounts. I'm not sure if this is a bubble or there's just a lot of money in there at the moment, but some of these numbers are just staggering. We've got top auction houses like Christie's. They're starting to accept Ether for their digital art sales. Fuocious, who we had on the channel a while back, and 2 Feet. So they've done $1 million in sales already. Red Fox, we had on the channel during the week. I think that was the interview that made it click for a lot of people that, oh, okay, I'm starting to get it now. Like everything that they do, a lot of people would have no idea still that they're teaming up with the likes of Samsung, Huawei, Unilever, to roll out all the different businesses that they have in their venture builder at present. Cometh is partnering with Avagotchi, so this is another example of layer 2 that's helping to solve the scaling problems. Rev Motorsports, they're switching to Polygon, so this is the Matic that have changed their name. So Matic or Polygon now, they're really helping a lot of these games solve the gas fee problem. And then we get into the world of, I guess, Web3, DWeb. This is one of the world's first decentralized peer-to-peer mobile Wi-Fi hotspots using crypto and NFTs. So this is called Aloha. There's a few other projects out there. I'm not sure if it's the world first. Is it Dentacoin? Even Nexus to some degree. There's a lot of people out there trying to build these decentralized internets and Wi-Fi networks. So Libra co-creators have helped fund this $12 million round for a decentralized GitHub. One by one, we're going to see every component of the current internet get built in a decentralized fashion. This is PoolTogether, so the lottery pool that I've done a tutorial on. They had their airdrop during the week. Another one that hopefully plenty of our members, you guys got this. I think it was worth a few $100s in the end. Insurance DAO, another cool project to keep an eye on. We've got obviously Nexus Mutual, one of our favorites. We've got Cover. There's plenty of ways to protect yourself in this crazy world of DeFi where there are so many hacks. This is the Graph Foundation adding support for Polkadot, NearChain, Solana, and Celo, as well as Ethereum. So the Graph, the querying protocol, part of that Web3 DWeb stack, expanding to other blockchains now. Expanding to layer 2 as well, using Matic. So look at that. I just love seeing, when people say, oh, Ethereum is crazy, it's just, it's not scaling. People just aren't looking. Like all the top projects are launching layer 2 solutions. Protocol Fractal, another very cool one that's helping to build this privacy layer on the internet for exchanging data. We've got Enzyme Finance launching their synthetic assets, very similar to synthetics, inverse products and tokens as well. Notional Finance, they're doing this fixed rate DeFi markets. Remember when Raul said, we need a yield curve, we need fixed rate borrowing and lending. Another project that's helping to solve that problem. Uniswap's hit $100 billion in trading volume. The Secret Swap network is live on mainnet now. They've got great interoperability with a number of projects and protocols already. Decentralized exchange, this has already launched ZK Swap, another DEX with scaling technologies and privacy technologies built in. This is Ribbon Finance, another great way for those of you that love getting your yield. This is a sort of yield hacking to get the best yields. Bank or Vortex, this has gone live. You can do single-sided AMA LP markets and provide liquidity in there as well. So all these different projects and protocols are going just parabolic with the amount of liquidity and total value locked in there as more and more people start to trade in this DeFi world. Now, traditional markets are also seeing, I guess, the value here. Bitwise have launched their DeFi crypto index fund. MakerDAO is one that's probably come back into favor, and it's been included in a few of these funds because they're starting to burn, $70 million in annual stability fees. It fell out of favor when they dropped interest rates to zero, but now that they've got these high interest rates again, they're starting to generate a lot of money, and that ends up being burnt. That's good for token holders. Nvidia are launching these tailor-made processors for Ethereum. They were in talks a long time ago to help support the network there. This is another fantastic app or DEX diversifier that's already using these layer 2 solutions to help people trade. So when people say there's no way to trade, it's too expensive, go and try some of these other ones out. You might even get a token airdrop to you if you're early enough. The Ethereum core developers are eyeing mid-April for this next Berlin hard fork that's going to have a lot of improvements, including necessary protocol changes to make the switch to proof of stake as we move to ETH2. Coinbase have opened their waitlist for Ethereum 2.0. We've got plenty of other exchanges that are starting to offer staking. I know I was talking to the guys at Kraken the other day, and they're saying that they've got a lot of assets that they're staking. They're very keen. They've just come, keen to break into the Australian market. So I might try and get in touch with those guys, because I know there's plenty of you that want to do more of that staking, particularly for ETH2, for example, that aren't tech savvy to do it yourself. Robinhood announces plans to offer crypto deposits and withdrawals. Every man and his dog wants to get into this network at the moment. This is Shadow's network, so again, synthetic assets coming to Polkadot. Guys, I am bullish on these other chains that are doing some fantastic things in the world of DeFi. It's not just Ethereum. There are other chains that are going to be doing this. Goldman Sachs, JP Morgan, some of these big names are trading an ETP tied to Polkadot's crypto. So just like we've seen DeFi starting to see smart money have a look at these very, very cool chains with strong tech and good ecosystems. This is Indexed Finance, another project that I really like. So they've launched their Oracle Top 5 Index with the top 5 Oracle chains. Most people know Chainlink, maybe Band. A lot of people might not have heard of those other 3, which are good projects too. KPMG, BitGo, Coinmetrics, they're launching these new offerings to help drive institutional adoption. So they want to launch these products that help these firms that are trying to get it to their clients, that they need education, they need a way to do this. NYDIG files for another Bitcoin ETF, hoping, fingers crossed, it's the year they finally say yes, and that would be massive. This Bitcoin ETF that opened in Canada did $80 million in the first hour. This is insane, and this shows you how big it would be in America if this is how much it's doing in Canada. German companies are starting to buy Bitcoin for their balance sheet because they're saying that they want to hedge against devaluation of the euro. So one by one, every country is going to do this. Starting to get mainstream coverage. This is the guys over at Apollo. Heinrich, a friend of mine, 62% in, was it the December quarter? This first quarter of the year has probably been even better. So people are starting to say, can we continue to ignore crypto? The Motley Fool, they've invested $5 million. I think they said they want to do a 10x or 20x is their aim. And it's funny how this article, I remember this clearly when it happened back in 2013. And they put this out saying why Bitcoin is a horrible investment because it had gone to $200 and then crashed to $50 at the time. MicroStrategy, they raised another $1 billion. Nuts, absolutely nuts. 50% conversion premium. The coupon's paying 0% yield, and yet people are still giving them $1 billion so they can buy more Bitcoin. This is the total amount in their treasury holdings, these different companies these days. I think it's something like 6% of all Bitcoin is now held in those treasuries. The market cap passed $1 trillion. Bitcoin's at 58,000 at time of recording. We did have a nasty throwback early on in the week. I think this was the biggest amount of liquidations ever on record for a lot of coins. Sorry, this was meant to be earlier on in the piece. I'll go through it now. You guys know NBA Top Shots, Cypherpunks. Some of these NFT volumes are going through the roof, as well as all the big crypto volumes that we're seeing. And Hi-Fi Protocol, sorry, another cool little project to check out that is in the DeFi sector. But let's have a look at the charts now. If we have a look at the weekly chart, we are still parabolic. I've been speaking about how I think Bitcoin had a little bit room to run compared to the others. So it was this altcoin index, the DeFi index that hit 12,500 that didn't make new highs this week. Shitcoin index, mid caps, a lot of these have sort of tread water, gone sideways, maybe a little bit higher. Some coins like BNB, DOT, they've exploded higher. But when you just have a look at these charts, I'm going to stick with what I said before about maintaining caution. Even Bitcoin is starting to go pretty crazy. Once you get into this blow-off phase, anything can happen. In 2017, Bitcoin might have topped at 10,000 or 15 or 20 or 25. You just don't know. And Bitcoin could have topped at 45, 55. It might go to 60, 70, 80 or straight to 100,000 vertically. But all I know is that every time throughout crypto history, when something goes vertical, the higher it goes, the harder it falls. And so my message is about taking profits when you've made life-changing amounts of money on altcoins, never selling it all, because you can always sell a little bit more if it goes higher. I think a lot of people misinterpreted what I said because I was pretty clear that I still own plenty of Bitcoin and Ether. I just wanted to sell and take some profits on a lot of those DeFi coins that had gone ballistic. And I didn't sell alts like I said, Red Fox, that hadn't gone parabolic yet. And now Red Fox has done 500% or 1,000% in the last couple of weeks. So again, I might start to take some profits depending on where I believe a coin is in its cycle and can it keep going long term. So it's never a bad time to lock in some profits. But I think people make the mistake of going all in or all out. Or when they see an update that says someone is selling and taking profits, they sell all their portfolio on every coin. You should never sell all your Bitcoin ever, because it can always go a bit higher than you think, and you're probably always going to want it long term. All of a sudden, this $100,000 target in 5 years of mine doesn't look so silly. And maybe we're going a lot higher than everyone thinks. I've heard rumors about BlackRock buying. We've heard Apple following in Tesla's footsteps. So maybe we go to 200, 300,000 in this cycle over the next few years. You want to have your ticket to the train. It's all well and good to take some profits, but you still want to have a stack that's growing as we continue higher in this bull market. So look, yes, I know markets is continuing to go parabolic and higher than I had expected. So that doesn't mean I've changed my message about caution, guys. Take care. I hope you're enjoying these updates. Smash that like button. Head over to our website. Tell your friends and family to get their education from there. And I'll talk to you again soon. Cheers.